To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, the legendary finance expert, has just revealed that Bitcoin is on the verge of a game-changing rise that will completely shock the world. When asked about Bitcoin's current price, Lee didn't flinch. Despite the doubts swirling around, he believes that this is still a massive win for anyone holding Bitcoin, considering its mind-blowing growth over the past decade. Sure, Bitcoin's value is influenced by market mood swings and external shocks like tariffs, but Lee is unwavering in his belief that Bitcoin's long-term potential is astronomical. He's not just talking about a steady climb, he's predicting an explosive future, where Bitcoin evolves into a gold-like store of value, with millions of new buyers flooding in. Hold on tight. In the next 5 years, Lee forecasts that Bitcoin's trust factor will soar, propelling its acceptance and value to levels that seem almost unreal. Sure, short-term volatility might throw some off course, but Lee firmly believes Bitcoin will bulldoze through every obstacle, emerging even stronger. Let's watch clips from Tom Lee's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, and the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy. I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish. Right. But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. if I'm guessing, it's more in the second half. So I think I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, like how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about, let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and like, oh, we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in.
Tom Lee advises his clients to invest in cryptocurrencies for the long run, but the majority of traders are looking for quick profits. Since mid-January, Mark Newton, Lee's technical strategist, has maintained a pessimistic outlook on Bitcoin, Ethereum, and Solana, predicting that the price of Bitcoin will drop to $62,000 by the end of March. According to Lee, the retail mood has reached levels similar to those of the 2012 bear market. This indicates that investor sentiment has become too pessimistic. Although he expressed concerns about employment prospects in the near future, Tom Lee claimed that the market has already factored in a lot of negative news. He also thinks that as the economy gets closer to stall speed, the Fed will have to change its policy. Let's watch more clips from his interview.
Is trade and tariffs, is this one of the biggest kind of headwinds, do you think, to the economy and the markets right now?
It has a potential to become a headwind. I mean, the reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's like a fact. Because I mean, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House, I know that I have some opposing risk from the Fed today because the Fed's hawkishly paused. Well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. But then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because, a shallow recession, I mean, a recession is unknown once it starts. I'm going to say, I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. I think consumers are happy when markets are going up and when gasoline's cheap, and then probably when grocery store bills aren't going up. So stock market hasn't gone up. It's kind of flat for the last 6 months, and gasoline's not super cheap. And then, as you know, it's not like it's gotten cheaper to go to the grocery store. So I think that there might be an intangible, like those who voted for change politically, their confidence has gone up. But then for those who like the previous political party, they have no reason to be cheering, right? So it's kind of messy to expect consumer confidence to be good. But, I think another thing to keep in mind is, like, when economists talk about Canada and Mexico tariffs, they're expecting Mexico and Canada to go into a recession. So it's kind of weird for someone to think that the U.S. should have accelerated growth or inflation. To me, one of the, I think, sleeper winners from all of this is going to be the financials, because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks, and AI is actually good for business. And JP Morgan and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever. And now you have all this reversing. Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well.
Trade and tariffs, in Tom Lee's opinion, are major obstacles to the market and economy. Tariffs can cause a recession by causing a significant shock. Lee points out that while tariffs are helping the administration achieve its objectives, they are doing so at the expense of declining consumer confidence and slowing business activity. Consequently, the Federal Reserve might be compelled to reconsider its neutral position and possibly adopt a less hawkish attitude. The effect of the tariffs on inflation is also being examined. The Fed once thought that tariffs would cause inflation, but it's now becoming evident that they have the opposite effect, eroding consumer confidence and lowering demand. Certain industries might nevertheless offer chances in this unpredictable climate. For example, financials may finally benefit from the current climate after underperforming for 15 years. Since Lee's technical strategist, Mark Newton, predicted a drop to $62,000 by the end of March, digital assets like Bitcoin are also worth keeping an eye on. Meanwhile, according to U.S. President Donald Trump, the U.S. will become the crypto capital of the world by establishing a strategic cryptocurrency reserve that will include Bitcoin, Ethereum, XRP, Solana, and Cardano. This action marks a dramatic change from the previous administration's war on cryptocurrency because of worries about money laundering and fraud. Following the announcement, the market reacted favorably, and the values of the cryptocurrencies in question increased. Trump intends to hold the inaugural crypto summit at the White House to deliver further details about the new stockpile, while the specifics are still unknown. Additionally, new crypto rules and regulations will be proposed by the Presidential Working Group, which could lead to a more benevolent regulatory environment. As we wrap up, the big question is, what impact do you think the creation of a strategic crypto reserve could have on the U.S. economy? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.